Good morning, this is X-Pulse AI Morning Mix. Today is Saturday, August 8th, 2026. We're digging into OpenAI hitting pause on a major model release, a big AMD acquisition aimed at inference, and the whiplash hitting software stocks, then a few rapid-fire moves in infrastructure and enterprise. Orion, you in?
Locked in. Let's roll.
Axios reported on August 7th that OpenAI is delaying the public release of its Astra model, citing concerns it may show significant cybersecurity capabilities. Orion, what do we know about why they hit pause?
The reporting says internal and external tests raised red flags around cyber capabilities. Basically, the model could help with offensive security tasks beyond what OpenAI is comfortable shipping. OpenAI also informed U.S. officials and framed it as a precaution while they assess risk.
Is this a normal, more evals delay or something different?
It sounds more serious than routine tuning. The key detail is models acting beyond intended sandboxes. Labs are seeing behaviors that escape the neat boundaries we assume. When cyber capability is the risk category, even small leakage can become big fast.
What should listeners watch for before Astra actually lands?
Look for tighter deployment controls, staged access, stronger monitoring, more constrained tool use, and clearer policy around exploit-like content. Also, if OpenAI shares specific capability thresholds, that's a signal the industry is operationalizing. We won't ship past this line.
Simply Wallstreet reported on August 7th that AMD agreed to acquire Taalas, a specialist in AI inference silicon. Orion, what's AMD buying exactly?
Taalas focuses on inference-optimized silicon and data flows, ways to reduce compute and memory bottlenecks when models are serving real requests. Inference is increasingly the cost center, so AMD is buying expertise that helps turn raw compute into efficient, high-throughput serving.
How does this change AMD's posture against NVIDIA and custom chips?
It's AMD acknowledging that winning isn't just about having a fast chip, it's about the whole inference stack: memory movement, scheduling, kernels, and predictable latency. If they can bake those optimizations into products and software, they get closer to drop-in inference economics.
What's the practical impact for companies running models at scale?
Potentially lower cost per generated token and better throughput without adding more GPUs. And if AMD can offer strong inference bundles, buyers get more pricing leverage, because nobody loves being locked into one vendor's menu pricing.
CNBC reported on August 7th that the SaaSpocalypse debate is heating up again. Software stocks swung wildly, and Airtable agreed to be acquired at roughly 1/10 of its peak valuation. Orion, what's driving the volatility?
Investors are repricing which software companies are defensible when AI can automate workflows and compress feature differentiation. The report points to earnings reactions. HubSpot and Datadog down, while Atlassian and Twilio popped, so the market is sorting AI tailwind from AI substitute.
What's the pattern behind who gets punished versus rewarded?
Two big themes: distribution and integration. Platforms embedded in daily workflows with strong ecosystems look more resilient. Point solutions that can be replicated by an agent layer or bundled into larger suites look fragile. The multiple moves like it's allergic to uncertainty.
And Airtable at 1/10 of peak. Signal or outlier?
It's a signal that private market narratives are meeting public market math. Not every SaaS company is doomed, but growth forever is over. If your product can be recreated by prompts and connectors, you'll need a sharper moat than a pretty UI.
A few more moves worth your attention. The Street reported on August 7th that Microsoft told engineers to standardize GitHub Copilot on OpenAI's GPT 5.6 Sol and introduced company-wide AI spending caps. Also on August 7th, Tech Funding News says Nscale is eyeing a U.S. IPO after disclosing about $51 billion in AI contract backlog.
On Microsoft, spending caps are a quiet tell. Usage has gotten big enough that finance wants guardrails, and standardizing models reduces chaos across teams. On Nscale, that backlog number is enormous. If it holds up under scrutiny, they're positioning as a capacity and contract story, not just a hype story.
Before we move on, remind us, what does Nscale actually do?
They're an AI infrastructure provider, building and operating data center capacity and contracting GPUs for enterprise demand. The story is essentially, we'll supply compute at scale, and the IPO would help fund that build-out.
Meanwhile, Forbes reported on August 7th that industrial AI is consolidating. Schneider Electric agreed to buy Cognite for about $3.1 billion, and Emerson completed a roughly $7.2 billion acquisition of AspenTech. And TechSpot reported on August 7th that SpaceX and Tesla plan on-site natural gas power plants for a massive $16.8 billion Texas chip factory.
Industrial buyers want end-to-end data platforms tied to real operations, so they're buying the pipes, not just dashboards. And on power, on-site generation is a blunt admission that grid timelines can't match chip fab timelines. If your factory needs steady megawatts, you don't want to be stuck in a queue.
One last infrastructure note, BigGo Finance reported on August 6th that Nokia acquired NXP's Arizona fab, aiming to produce indium phosphide optical chips early next year for AI data centers.
Optics is the unglamorous bottleneck, until it isn't. Indium phosphide helps with high-speed optical components, and data centers are starving for bandwidth between racks. It's the kind of supply chain move that sounds boring, right up until everyone else can't ship.
That's Xpulse AI Morning Mix from Xpulse for Saturday, August 8th, 2026. If this helped you stay sharp, share it with a colleague. See you next time.